Business News, where news for business people.
Hello and welcome to Bloomberg Quint Live, and you're watching Trendspotting. I'm Navneet Saluja D'Souza.
Good afternoon, Navneet. I'm Agam Vakil, and in the next 30 minutes, we deep dive into specific trends in the markets to draw key takeaways and its implications for investors. But first, the headlines. Friday cheer on the last street as Indian markets hit fresh highs in early trade. Momentum continues in benchmarks. India VIX cools off. And Indian Overseas Bank surges as much as 10% after the bank announced to write off its losses of nearly 7,000 crore by adjusting it against the share premium. The bank's MD and CEO tells Bloomberg Quint it's a set-off and not a write-off aimed at increasing shareholder value. The Bloomberg Commodity Spot Index hits a 3-year high as manufacturing activity picks up across the world, and the US calls Pakistan a safe haven for terrorists, suspends all security aid to the country.
All right, let's take a look as to what's happening with the markets today. As Agam highlighted in the headlines, we once again touched the fresh lifetime highs for Nifty, but Nifty's come off a bit from those higher levels, currently trading with gains of almost 34 points, Sensex 2 up almost 130 points. In Bank Nifty, that's the one which has been in focus after yesterday's rally that one saw for the PSU banking space. So Bank Nifty is holding above the mark of 25,550 as we speak. Let's also do a check for the broader markets, which have been outperforming the benchmark indices at least in the last 2 to 3 sessions. So the BSE Mid Cap Index up 0.6%, and the BSE Small Cap Index is also trading with gains of almost 1%. And similar is the picture when it comes to the broader market indices of National Stock Exchange. The Small Cap Index has seen gains of almost 1%, and the Mid Cap Free Float 100 Index of National Stock Exchange is seeing gains of almost 0.8%. Good news is that the volatility is down for the third straight session. So the India VIX is down almost 2%. Remember, it has to recede below those levels of 12.5 for markets to scale even higher from these all-time high levels. So 13.14 is the mark where India VIX is trading. All the sectoral indices on National Stock Exchange today are trading in the green, and the major gainers are the Nifty Realty Index, that's up almost 1.6%, and the rally for the metals continue in today's session as well, after Nifty Metals Index saw gains of over 2% yesterday. In today's session, it is up almost 1%. Let's just pull up the contributors list then of Nifty constituents and check which are the stocks which are contributing the most. Yes Bank is your top gainer on Nifty with gains of over 4%, and that's contributing almost 8 points to today's gains that one is seeing on Nifty. TCS, Maruti Suzuki, IndusInd Bank are a couple of the other contributors. What's dragging the index lower are your heavyweights. Infosys and ICICI Bank both are trading in the red, and besides that, a couple of your oil and gas companies, HPCL and ONGC, are trading under pressure. But the picture is looking good when it comes to the broader markets. Agam, any pockets besides we've seen good gains for mid-cap cement companies? The tire stocks have been doing pretty well today.
Absolutely, Navneet. You mentioned the mid-cap cement companies. Let me start off with the market breadth, as you may have already addressed. When it comes to the broader market indices as well, it's fairly positive. In fact, you have about 2 advances for 1 decline. That said, as Navneet was just mentioning, Prism Cements is gaining steam. And Prism Cements is now up as much as 12%, and we've seen a lot of traction not only in that company but several other cement companies. I do also want to pull up Jain Irrigation, which has also advanced around 10.5%. It did go into the F&O ban yesterday, but that's not stopping traders and investors to buy into the cash market for now. Well, it's actually come off a little bit from, okay, there you have it. All right, that's DVR, there you have it. It's about 10.5%. We're looking at gains in Bajaj Electricals, that's also gaining and advancing as much as 6.4%, and Lakshmi Machine Works up 6.2%. So on the whole, these are some of the large gainers. In terms of some stocks which are losing out in trade, again, since we have the usual suspects as Bombay Rayon. Prakash Industries down by as much as 3.5%, and HEG looking at a little bit of profit taking after the substantial up move it has seen over the past few days. So HEG along with Graphite are possibly two counters which are looking at some amount of profit taking, but do remember these are the biggest movers in 2017 on account of the demand-supply situation for graphite. But that said, overall, Navneet, given the fact that the advance decline ratio looks positive, that's going to be something which is going to be taken as a good thing by the bulls.
For sure, and it's looking like a good close for the week as well. That's about the markets, but on trend spotting today, what's helping TT Limited register strong gains? We asked the Managing Director, Mr. Sanjay Kumar Jain. And are there more legs to the metal rally? We asked Vinit Bolinjkar of Ventura Securities. And how has December been for mutual fund holdings? We find out all of this in the next 30 minutes for you. Well, on to our first trend of the day then. It has been a strong 2017 for TT Limited, with the counter gaining almost 180% in the last year and has registered gains of almost 30% in the first 5 trading sessions of this new year. What is aiding this up move in the counter? Is the business all set to turn around this year? Well, to answer all of these questions and to discuss the road ahead for the company, joining us on the show is the Managing Director, Mr. Sanjay Kumar Jain. Mr. Jain, good morning to you and thanks a lot for joining us today on Bloomberg Quint. My first question is regarding your Tamil Nadu plant. You've sold your plant and machinery units, in fact, there. Does this also involve the land? And also tell us what funds have been realized from this sale.
No, we have just sold plant and machinery of our spinning factory. We haven't sold the land and building. And we have sold it both for our Tamil Nadu plant and partly for our UP plant also. And the funds are primarily being used to currently to reduce our debt.
All right, so can you give us a quantum of the funds that you're going to realize through this sale?
The funds have not come in completely. The funds will be totally realized by the end of February. The figure for selling our plant and machinery would be about 30 crores.
Okay, and also if you could tell us more about your restructuring plans going ahead. What are the business segments that you plan to exit and what core businesses will the company be left with?
We are just exiting 50% of our spinning capacity. The balance, all our businesses will be running as they are. However, we are now shifting our core focus to our garment and undergarment business, which we sell currently under TT brand and also our recently launched High Flower brand. So we're going to be more focusing on our garment business, the more value-added business, which will also de-risk the company and reduce the beta of the company, as spinning has much more volatile earnings as against garment business.
So what opportunities are you viewing in your garment and your undergarment businesses, Mr. Jain?
We are in place of the land and building which we have got vacated out of by selling spinning machinery. We'll be installing garment units in both Tamil Nadu and Uttar Pradesh. We'll be taking advantage of the recently announced Uttar Pradesh textile policy. It's in a draft stage. It will get notified very soon. Hence, we will be enjoying the benefit of capital subsidy both from ATUF, which is a central government scheme, and also from the UP textile policy. Hence, the capital subsidy would add up itself to about 35%. Plus, there's interest subsidy, there's electricity duty subsidies, there's GST subsidy, and also labor subsidy. So this will also make us very, very competitive. And our garment brand portfolio, we plan to double in the next 3 years by working very aggressively. And plus, we have also recently started a chain of EBOs by the name of TT Bazaar, which runs under the franchise model. So it does not entail any capital investment from our side. However, it will give us direct connect to the consumer across the country.
Mr. Jain, you spoke about TT Bazaar. How are you ramping up business in this format?
It's a very simple plan. We are basically opening friendly neighborhood shops. They're not going to be fancy shops ranging from 250 square feet to 1,000 square feet. And they are going to be totally on a franchise basis. Hence, we would not be investing any money in any of these shops, apart from providing them branding support, local publicity, and also systems and processes. Hence, we already have almost reached a figure of 50 TT Bazaar stores, and we have another 50 inquiries in pipeline. And we expect in the next in 2 years to reach a number of 200. Primarily, they would be based in North India, and then slowly we would expand in concentric circles so that the logistics and servicing can be managed properly.
All right, so considering your business is undergoing a structural change, what will this mean for margins in the near term and over the span of the next 1 year?
Yeah, you will start seeing them immediately, some improvement and stability. And then you will see, every quarter you should expect an upward curve, which every quarter you're going to see. However, it's going to be a growing business. And we don't expect to stop after 3 or 4 quarters because we are going to be really going very strong. And we see huge potential post GST because there's a very large unorganized market, garment market in India, which is almost about 50% of the total garment market. And with GST coming in, organized players, branded players like us, a huge opportunity has come up because the cost disadvantage which we had against the unorganized segment is no more there. That itself means that we are closer by 5 to 7% on the cost front.
Okay, and could you tell us more with regard to capital expenditure that you've lined up for your focus businesses?
Yes, we would be the capital. Of course, garment does not entail so much of capital expenditure as spinning does, but we still plan to invest about 75 crores with various garment facilities. We are also setting up a facility in Kolkata, the eastern part of the country. So about 75 crores fresh investment would happen over the next 1 to 1.5 years, over in a gradual fashion.
And so TT brand is a very well-known one across a lot of states. So what do you have in terms of plans for advertising spends as we move forward?
We would be spending about 7-8% of our garment turnover on publicity and advertising and brand building.
All right, Mr. Jain, thanks a lot for joining us today and taking us through the outlook for TT Limited, a company which has outperformed in the last 1 year. In 2017, as we highlighted, the stock seen good amount of gains. Last 12 months, it's up almost about 183%. But focusing back on markets, remember the kind of rally that one has seen right from 2017, it has been led because of domestic liquidity. So the total assets under management have actually dipped 6% in the month of December, while the mutual fund holdings, they saw a total outflow of 1.64 lakh crore. Let's get in Jayesh Kilnani, who has pulled up an interesting trends in this. Jayesh, over to you.
So Navneet, it's been a good month, December, for the equity mutual funds, but not so much for the debt funds. But let's go through the numbers of the asset management, total asset under management. So if you look at the total asset under management, dipped about 6% and clocked 21.37 lakh crores. Now, what has led to this is, money market, which has contributed the most significantly to it. So money market AUM declined as much as 31% to 2.97 lakh crores, and the income fund also declined about 7%. But the equity and balance fund, on the other hand, they have seen a 5% and 8% respectively in their asset under management that has gone up. Now let's have a look at how the net flows have been for each of these categories. First, whether it's a net inflow or an outflow. So the total outflow for the month has been 1.64 lakh crores versus an inflow of about 1.26 lakh crores in the month of November. Let's have a look at what contributed to that 1.64 lakh crores. Well, most of it is from the money market space, which has seen redemption to the tune of about 1.27 lakh crores versus some inflow that we had in the month of November to the tune of about 75,000 odd crores. The income outflow, which is the major part of it, that contributed about 60,150 crores versus an inflow of about 9,400 odd crores. The other segment, which equity, that saw an inflow number that was down at about 24%. Mind you, we have seen very good numbers coming in from the equity market, but this time around it was about 14,900 odd crores versus inflow of almost 20,000 crores for the month of November. Balance funds as a category, that has seen a lot of traction, and we have got a lot of guests who have spoken about this category as well. That inflow was up about 28% at nearly 10,000 crores versus about 7,500 odd crores for the month of November. So that's how the entire space has panned out. Now this 1.64 lakh crores, don't go too much into or don't look deep into the number, because I spoke with a few fund managers and they've said that this is seasonality factor which has played out due to some liquidity crunch that they faced in the month of December, but they're expecting Jan and Feb to see a revival in most of these categories.
The numbers did go down when it comes to the equity-related mutual funds for the month of December. But remember, there was still an inflow, right, Jayesh, for both equity as well as the balanced funds?
Yes, that's right. So equities also jumped, as well as the balanced category, which is the more popular category, or rather, it is gaining a lot of traction. In the recent past, we've had a lot of guests come on the mutual fund show who have also spoken very highly of this category, and they believe that going forward, this will be the category to watch out for.
All right, Jayesh, thanks a lot for bringing in all those details. That's quite interesting that net there was an outflow, and that's precisely because of the outflow that one saw in terms of bond portfolio. But if you look at equity related, that's equity related mutual fund, and also for balanced funds, there was an inflow. But the number month on month, as Jayesh highlighted, did go down, and that can be a seasonal factor which he highlighted because of the holiday season. So that's about the AUMs, and let's see actually how these numbers, Agam, they pan out for now 2018, because so far we've been talking about this rally to justify it. It's only about liquidity, and not only in India, globally it's been a liquidity driven rally that one has seen for equities, but we still have to wait and watch for the earnings growth to come by. I think the focus now shifts to budget, the third quarter earnings as well.
And Navneet, you were mentioning the fact that we're still waiting for earnings, because we spoke to Pramod Gobbi this morning, and he also suggested that while we have seen the benchmark indices move up, it's about time that fundamentals start catching up. We've seen a little bit of an improvement in the economic data. That said, as you mentioned, we are still to see whether or not that earnings growth will come back. If that earnings growth doesn't come, then we could have a problem when it comes to
you know what? It's been 3 years. Every year you talk to these analysts, they give you some number, 10, 15, 20%. Yes, I think the average now, which they are factoring in for FY19, they do expect an average earnings growth of 15%. But if you ask me, the multiples have been expanding because the prices have been going up. The markets are trading around these all-time high levels. So that earnings growth has been factored in the current prices. So if it actually doesn't come about, you could probably see some sort of correction to come by. But as we mentioned, now the focus will actually shift to earnings. There's budget lineup, and so many state elections are there in 2018. And as we speak, the markets have also come off day's high. The Nifty is now trading around the mark of 10,531. Remember, it's Friday, so it could be a function of profit booking, because most of the traders, they don't want to carry over their position to the next week. But if the closing once again comes above the mark of 10,500, like we closed yesterday, it's a positive sign, considering we have been trading around the all-time high levels. And as we speak, if you could just pull up the intraday chart of the Nifty PSU banking space, remember that's the one which was in focus yesterday. It gained after that news of PSU recap 80,000 crore worth of bonds, which will now start flowing in the next 2 to 3 months. There you go. It's trading at a day's low now. So some sort of that correction which you saw in the index has actually come because of that. And only Punjab National Bank and State Bank of India, these are the only two constituents of this index which are still trading in the green. Losses have been seen for Union Bank, Bank of India, IDBI, which surged sharply around 8 to 9% yesterday, has given up its gains. Bank of Baroda, Andhra, you name it, and all these banks are seeing some bit of correction, and they all are at day's low. I think it's more more of a function of profit booking because most of them went up yesterday?
Navneet, I wanted to make a point here. Since we've seen the big rally in the markets, at least on a technical basis, a lot of analysts are pointing out that the markets have not seen a meaningful correction. And by meaningful correction, that is a correction of well over 10 to 15%. That is that which is considered in a technical terms as healthier. So, again, and a lot of those analysts are factoring in some amount of, correction, at least in 2018. So, on the whole, at least as far as the benchmarks are concerned, the Nifty is currently trading at lifetime highs, and we'll have to wait and watch as to whether or not, that big correction comes in 2018.
All right, but one space, Agam, which has really outperformed in 2017 and it's having a great start to 2018 is the metals space. The Nifty Metals Index has gained almost 6% in the first 5 trading sessions of 2018. Well, with the global commodity market on a rise, what's in store for the Indian players in this space? To answer this and to give us an analyst perspective, joining us on the show is Vinit Bolinjkar, Head of Equities Research at Ventura Securities. Hi, Vinit. Good morning to you and thanks a lot for joining us today on Bloomberg Quint.
Yeah, pleasure to have me.
Vinit, I want to start off with the steel makers. We've seen a good rally this week for the likes of Jindal Steel, JSW, Tata Steel. Most of these stocks have been doing pretty well. And the majority of the rally has come down because of some factor related to China. There were capacity shut down. And also in 2017, we did see the steel exports from China falling for the first time in last, I don't know how many years. Do you see this rally continuing, considering NMDC took a price hike now for the month of January? And I guess that price hike was pretty steep, almost 20 to 25%.
Yeah, so what we have to understand is that the Indian iron ore prices were at rock bottom and much lower than global market. So this price hike is purely keeping in mind the fact that demand for steel in India has picked up significantly. So that price hike has come in, and NMDC is going to benefit purely from not only from the volume thrust that will come through, but also from the price hike that they've initiated right now.
Okay, Vinit, considering firstly, if you can give us an outlook on iron ore and coking coal, do you expect these prices to stabilize? Should we see, further up move in these prices? In that case, what could it mean for the larger steel companies like JSW, JSPL, or Tata Steel for that matter?
Okay, so the first thing is that the price, generally there is a commodity boom and prices could move up slightly. But what we have to understand is there's a plethora of supply coming in, and Australia is going to be the swing factor here, combined with the demand reduction in demand from China. So what we're going to see is that the prices may move up a bit due to speculative natures, but on the fundamental side, the prices should more or less stabilize around these levels. So on the input side, we should see stability of pricing. However, what we have seen is that the blast furnace capacity in China is being shut down, and so that is going to lead to China becoming they've cut back on their exports, and India has also become a net exporter of steel of late in flat products. Additionally, what has happened is that the delta differential which was there between Indian prices and global prices, that has also turned favorable for the Indian players. So we should see some kind of pricing increases also coming in the Indian markets as we go forward. So what this all means is for the people, so for the integrated players, they are definitely well set. And for players like JSW and JSPL, who are partially integrated and not entirely, it would also mean that they would not be impacted too much, and if there would be some kind of price escalation happening on the input side, they can very well pass through the price hikes. Further, what is happening is that the import price parity, Indian prices of steel are much below import price parity, where the MIP kicks in. So I think we are very well set.
Vinit, in fact, we did speak to the management of JSPL yesterday, where they pretty much highlighted that they'll be able to pass on any sort of increase which takes place in the industry. So they were sounding pretty bullish on the outlook going ahead for the steel sectors, so to say, in India. A lot of brokerages, right, from Goldman Sachs, they said this is the multi-year upcycle that one is seeing for this steel sector in India. I want to talk about the earnings. The Q3 earnings will start flowing in a couple of days. What sort of earnings are you expecting, earnings growth, when it comes to the top line or realizations? How do you expect them to pan out for the third quarter?
So more than looking at it on a quarterly basis, now what I would like to give you is a long-term picture. Over the next 10 to 12 years, we are going to see Indian steel demand grow by 10 to 12%, which is a very, very strong kind of growth driver. Combined with that, if we were to come down to JSPL, which is our coverage stock and which we are quite optimistic about, we are seeing that the EBITDA will double by FY20 from to around a shade below 10,000 crores. Turnover will double, EBITDA will double, and profit will be around 2,000 odd crores. So this stock is available at a EV by EBITDA multiple of 4 times, and this definitely leaves substantial scope for appreciation. In fact, from these levels, we could even see the price double over the next 18 months.
Okay, Vinit, so you did speak about JSPL as something that you prefer in this sector. Are there any other stocks that you prefer, or for that matter, are there stocks that you would absolutely avoid and not touch, say, in the near term?
So I think the one stock which is a dark horse, I think, is SAIL, because their capacity expansions are going through. So what we have to understand is, in the industry, two things are happening. Is that the larger players are more going for the inorganic route of expansion. So that is going to happen only with, and they're waiting for the stress asset cases to play out. So there are only two companies which have done substantial expansions. One is JSPL and SAIL. SAIL, in fact, has done a significant expansion without any curtailment of, without any significant debt enhancement. So any price hike that plays out will definitely help JSPL and SAIL, and into my mind, these are the two stocks which are the biggest beneficiaries.
And in fact, Vinit, these are the two stocks which were so far the underdogs, so to call it, of this sector. And both of them, the stock prices of Steel Authority as well as Jindal Steel and Power, has seen substantial gains in the last 1 to 2 months. Thanks a ton for joining us today and giving us your outlook on the metal space. Well, moving on back to markets, let's find out which are the buzzing stocks of today. And Yash Upadhyay joins us with more details on that. Yash, over to you.
Thanks for that, Navneet. So we start off with Indian Overseas Bank, and the stock has surged more than 10% today after the board approved the plan to utilize their balance in the share premium account, amounting to almost 7,650 crores, to write off their accumulated losses to the tune of 6,976 crores. Now the bank is under the RBI's prompt corrective action plan and has a gross NPA of almost 21.7%, will be convening an extraordinary general meeting of its shareholders on January of 38th to obtain their approval. Moving forward, we also have Varun Beverages, and the stock has gained close to 6% today after the company said that it has entered into a strategic partnership with PepsiCo India for its entire portfolio of Tropicana products, including Gatorade and Quaker Value-Added Dairy in the North and East India territories. GM Breweries is up as much as 12% today on the back of strong results. Their revenues came in 20% higher on a year-on-year basis. Margins too seeing a healthy bump up from 15.3% for the same quarter last year to 28.8%. Net profit up as much as 120% as well. Moving forward, we also have Bharat Forge, which had gained close to 2% on the back of strong numbers coming in from the US North America Class 8 truck sales, which grew 77% in the month of December. Jubilant Foodworks had gained close to 4% today on the back of Jefferies coming out with a note initiating coverage on it. Now they have assigned a buy rating and have set a target price of about 2,200 rupees, which indicates a potential upside of 20% from its previous day's close. Gravita India had also gained close close to 6% today after the company said that it has started the commercial production of lead tetraoxide chemical at its plant in Jaipur. The plant has a total capacity of 7,500 million tons per annum and is used in various segments such as ceramic tiles, crystal glass inverters and solar batteries as well. And lastly, on the back of heavy volumes, we're looking at Lakshmi Machines, Prism Cement and Jagran Prakashan with volumes anywhere between 42.2 times to 28.4 times that 20-day average.
All right, Yash, thanks for joining us and giving us an update and a list of all the stocks which are buzzing in trade today. But we're running out of time. So with that, it's a wrap on this edition of Trend Spotting. Up next is Hot Money. So stay tuned in a Bloomberg Quint Live.